Wall Street just did something it has never done before. JPMorgan, Goldman Sachs, BlackRock, and Vanguard, together, tokenized real stocks on the DTCC for the first time in history. This is not a test. This is live. The Invesco QQQ Trust, that's the Nasdaq 100 ETF with over $250 billion in assets, just had a portion of its shares tokenized by JPMorgan. The shares are held at the DTCC, the world's largest securities depository, and can be converted back to traditional shares at any time. This isn't just one bank playing around. The working group includes BlackRock, Circle, Morgan Stanley, Nasdaq, Kraken parent Payward, and Robinhood markets. They're building the infrastructure for tokenized stocks to trade 24/7, settle instantly, and be accessible to anyone with a smartphone. Why now? Because the DTCC, which processes over $2 quadrillion in securities transactions every year, is finally opening its infrastructure to blockchain. This puts direct pressure on crypto-native firms like Ondo and Securitize, which built high-profile partnerships with institutions by moving faster than legacy systems. Tokenized stocks mean you could buy a fraction of an Apple or Tesla share on a blockchain, trade it on a decentralized exchange, and settle in seconds instead of 2 days. The implications for global access, liquidity, and cost are enormous. Coinbase CEO Brian Armstrong recently said he believes it could cost zero to send remittances in the future. Tokenized stocks are a step toward that vision, frictionless, borderless value transfer backed by real-world assets. But not everyone is celebrating. Bitcoin ETFs saw $225 million in outflows today as macro caution sets in ahead of the Fed meeting. Ether funds quietly attracted capital, suggesting rotation within crypto. Meanwhile, Meta rolled out digital dollar payouts for global creators. That means creators on Facebook and Instagram can now receive payments in stable coins, bypassing traditional banking fees and delays. Meta's move is part of a broader trend. Big tech is embedding crypto payments into their platforms. If Meta can make digital dollar payouts seamless, it could onboard hundreds of millions of users to stablecoins without them even knowing it. Alphabet also reported earnings today, $119.8 billion in revenue, with Google Cloud surging 82%. That's a clear signal that AI infrastructure spending is exploding, and it's directly tied to the same blockchain and tokenization trends we're covering. Tesla also posted a record $28.2 billion in revenue, but shares fell after the earnings miss. Tesla's Bitcoin holdings remain a wild card, and the company hasn't sold any this quarter. Back to tokenization. The DTCC's move is a direct challenge to crypto-native tokenization platforms like Ondo Finance, which partnered with BlackRock to tokenize money market funds. Now the incumbents are fighting back with their own infrastructure. The working group's goal is to create a standard for tokenized securities that can be used across multiple blockchains and traditional systems. This is the Internet of Value that crypto has been promising for years. Robinhood's involvement is particularly interesting. The brokerage just launched Robinhood Chain, a layer 2 on Arbitrum, enabling global stock trading and AI-powered crypto investments. Now they're part of the DTCC's tokenization push. Robinhood Chain allows users to trade tokenized stocks 24/7, earn yield on stable coins, and use AI agents to manage their portfolios. It's a direct competitor to centralized exchanges and traditional brokerages. But there are risks. JPMorgan warned that MicroStrategy's Bitcoin sale policy could spike crypto volatility. MicroStrategy holds over $20 billion in Bitcoin, and any large sale could shake the market. Meanwhile, Riot Platforms transferred 500 Bitcoin to custody, signaling a strategic shift amid tight mining margins. Miners are increasingly looking to AI data centers for revenue diversification. The broader crypto market is feeling the pressure. Bitcoin dropped 3% today as ETF outflows hit $465 million and Coinbase selling accelerated. Macro caution ahead of the Fed's final meeting under Chair Powell is weighing on risk assets. But the tokenization news is a long-term bullish signal. When the world's largest asset managers and banks commit to putting real stocks on blockchain, it validates the technology in a way that no price rally ever could. Goldman Sachs also made headlines today, not for tokenization, but for restricting Hong Kong staff from using Claude AI. The bank is concerned about data security as AI tools become ubiquitous in finance. Meanwhile, former PayPal president David Sachs is bullish on Bitcoin long-term, saying the digital asset is a hedge against monetary debasement. His comments came during the OpenAI trial, which continues to dominate tech headlines. The tokenization of real stocks is the biggest story of the day, but it's part of a larger shift. BlackRock, ARK Invest, and Strategy just formed a Bitcoin security consortium to support the network's long-term security. Institutions are going all in. Metaplanet, a Japanese investment firm, announced plans for Bitcoin-backed bitbonds with 4% to 6% yields. This is a new asset class, corporate debt backed by Bitcoin reserves. The Nasdaq tumbled early today as chip stocks deepened their sell-off. AI-related capital spending jitters and chip-making advances in China are spooking investors. Nvidia fell, dragging the index near correction territory. Despite the market jitters, the tokenization news is a reminder that the infrastructure for the future of finance is being built right now. JPMorgan, BlackRock, and the DTCC aren't experimenting, they're deploying. What does this mean for you? If you're a crypto investor, tokenized stocks could bring trillions of dollars of traditional assets onto blockchain, increasing liquidity and demand for the underlying infrastructure. If you're a traditional investor, you'll soon be able to trade stocks 24/7 with instant settlement. The DTCC's move also puts pressure on regulators to clarify the rules for tokenized securities. The SEC and CFTC will need to decide how these assets are classified and who oversees them. One thing is clear, the line between traditional finance and crypto is disappearing. JPMorgan, BlackRock, Goldman Sachs, Vanguard, Circle, Kraken, Robinhood, they're all building the same future. It's just a question of who leads. If you want to stay ahead of these massive shifts, hit that subscribe button. We break down the biggest stories in crypto and emerging tech every day, no fluff, no hype, just the facts that matter. Like this video if you believe tokenization is the future.